And if I don't get any questions on income tax, then I'm just going to have the test and we're going to be finished with Unit 3. But income tax is tedious, and it's not difficult, it's just tedious. And I'm going to take this down now and go to the PowerPoint and go to the next slide, because the next slide is the one that you actually have to look at. Now, you do not have to write all of it down. You don't have to write the boxes, but you might want to make a note of this. If somebody has a book, see what page this book is, see what page in your book this is on, so I can write it on the board for everybody. It should be in 4E. It should be on the first couple of pages of 4E. Somebody get that page number, please. Just holler it out for me. Meanwhile, if you don't have a book, go ahead and write some of it down. Your gross income is what is given to you, what you're contracted for at work. If you go into a part-time job and your gross income is, I'm just going to say $15,000 a year, okay? That's your gross income. That's on what? That's on paper. In other words, that's what they're going to pay you, $15,000 per year at a part-time job. Did somebody get a page number?
No, I don't. I keep my book at home.
Okay.
I kept my house. Where do we get this PowerPoint?
Say again?
Where do we get the PowerPoint?
Off the videos.
Okay.
I'm not going to start sending the PowerPoints, because if I start sending the PowerPoints, then nobody will want them. And then one person will say, I want the PowerPoints. And then I have them on the videos, but y'all won't watch them on the videos. So I'm not going to send them on the PowerPoints because y'all won't watch them on the videos. Why am I going to send the PowerPoint?
Yeah, I do. I do watch it.
I know you do, Miss Annie Sador. You're 1 out of 30, okay? I've got 30 or 40 students. And if I send these PowerPoints out, only one will watch it. I will check on seeing if I can download it and send it out via email, like y'all will read it. I know Miss Annie Sador will, but nobody else will. But anyway, you can see them on the videos. That's why I never do send them out, because they're on the videos. But anyway, gross income is what you bring in. Okay? That's not what you take home. That's what's on paper. So I would put gross income, I would put on paper, because that's what your employer guarantees that you're going to take in, not take home, but take in at your job, minus adjustments to income. We're going to go through adjustments to income. That's your income as well as your retirement and your taxes and things like that. Adjusted gross income, that's this right here. So actually, you could put this down here and just keep going in a long way, but they didn't do it in a long way. They did it this way. And then you're going to minus the deductions. These are the deductions that the federal government gives you for being an American, okay? Now, the alternative to this is for you to keep up with your receipts. But the federal government said that's too much of a pain in the rear to keep up with, so we're just going to give you this much and this much. And most of the time, the deductions and the exemptions, unless you're a small business or a large business, usually people take the deductions that the federal government gives them. And that's for like gas, clothes, groceries, that kind of stuff. Okay? And that's the taxable income. Now, the taxable income is what you run through what we call the tax code. So you need to put tax code right here. Where it says tax computation based on rates or tables, put tax code. When you're listening to the news and they're talking about the tax code, that's what they're talking about. The brackets, the tax brackets. Where if you make over $250,000 a year, you pay up to 40%, almost 40% of your dollar, of each dollar you make goes to the federal government. And there are some politicians in Washington that wants to take 70% of what you make. I don't know how you feel about that, but I don't want people taking 70% of my check. But I don't make $250,000 a year, so I don't have to worry about it. All right. Minus the tax credits. What's a tax credit? Well, we're going to get into that. A tax credit is something that the federal government wants you to do. Can anybody name two? Anybody? That's usually the response I get from students. They have no earthly idea. An electric car. That's a tax credit. The federal government wants you to use electric cars, so they're going to give you a tax break or a tax credit for having an electric car. What about solar panels on your house? Yes, that's a tax credit. Anything the federal government wants you to do, then they're going to give you a tax credit for. Capiche?
Capiche.
And then you take off your total taxes, and that's where you take it to the accountant, or you figure out how much you make at work, how much you've taken out at work. That's what your W-2 tells you. And then you add those two up, and if you come up short on your withholdings from your paycheck, then you have to pay Uncle Sam the difference. What if you paid too much? You get a what? A refund, a tax refund.
How do you claim it without?
And a lot of people give more on their paycheck so they won't have to pay Uncle Sam, because that is a pain in the butt to pay Uncle Sam, because usually, you have to pay him a good bit. This is just a rundown of what we're going to be doing, okay? But it is nice to have it, and that's why I tell you to take a picture of it, or at least put it in your notes, or write down where it is in your book. But since none of you have a book, I can't give you the page number, so you need to look for it. Because the best thing to do is run a copy of it and put it on an index card and keep it handy for the test. That's the best thing to do for the one person that's going to do it. Okay?
I have a question.
Yes.
Okay, so like for every equation that or formula, I guess, that we've had to do, I've been putting them all on index cards, but like in the questions, will it say which one to use, or do we just have to know?
You just have to know.
Okay.
All right, here's the first. We're going to go easy on this, and that's one of the reasons I'm using the PowerPoint. I always use the PowerPoint on this one because I have to explain it step by step, because I'm going to tell you, if I was to put a number on this section as far as students not knowing what to do, it would be a 15 on a 1 out of 10, because students have no clue what income tax are. Okay, so I have to go very slow here. And if you know it, that's fine, great. Karen earned wages of $38,600, received $750 in interest from savings accounts, and contributed $1,200 to a tax-deferred retirement plan. She was entitled to a personal exemption of $40.50 and total deductions totaling $63.50. Find her gross income, adjusted gross income, and taxable income. Okay? Now, first of all, she earned wages of $38.60. That's her income. Now, see, a lot of people in accounting and in this section of business math, they don't fail it, or they don't suck at it because of the math. They suck at it because they don't know what's what. $750 in interest from a savings account, is that income or is that bill paid? Is that going out? What is that? See, I don't get any response because you don't know. Anything that comes in, anything that's given to you, write that down. Anything that's given to you is entitled income. So, is interest given to you or taken away from you on a savings account?
Given.
Okay, so that's income. So write that down. Interest on a savings account, highlight that. That is considered income. What if you win the lottery? Is that income?
Yes.
You bet your bottom dollar it is. What about if you sell a piece of property or sell a car? Yes. Anything that's put into your hand or your savings account or your bank account is income. Write that down. You contributed $1,200 to a tax-deferred retirement plan. You paid that out. Did you write a check? Ask yourself, did I write a check or did I take it out of my pocket? Did you? What does it say? Did you take in or did you contribute?
You contributed.
Does that mean coming in or taking out?
Taken out.
So you got to subtract that. Anything going out is a subtraction. Anything coming in is an add. You're adding to your account. Now, the federal government gives you, what is that, $10,400? That $10,400, you're going to subtract that out because the federal government says that's how much you can take out, whether it be rent on a house, mortgage, blah, 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 okay? Your utilities, your gas, your whatever. They give you that much money, and it's about $10,000 to take off your taxes. If you want to challenge that, you have to document it by what? Having all the what? Receipts. So there we go. Here we go. We're going to go do it. And you write this page down because this is, you are bringing in the income. What's the gross income? What is put into your bank account? The 38.6, which you make at your work, and then the 750, which is interest. So you add those two together. And that's called gross income. Very important that you know what that is. Now, we contributed to a retirement account. So since we contributed, that means we either pulled out that money in cash, or we wrote a check, or it was drafted out of our bank account. So that means subtract. There we go. So, AGI is adjusted gross income. Adjusted means take out the retirement. Any kind of retirement, IRA, anything like that you're going to use for retirement, you subtract because you're paying on it. Question. Now, I'm no scholar, but it looks like somebody did some wrong math that wrote the PowerPoint. What do y'all think? Okay, nobody's gonna make a sound on it. Okay. Go ahead and write it down as 387,150.
How did it move? How did it gain another place?
They made a mistake. That's what I was saying. Whoever wrote the PowerPoint made a mistake. Take 39,350 in your calculator and subtract $1,200. What do you get? You should get 38,715. What?
I got 38,150.
Okay. Somebody hit a 7 while they were typing it in. So just write 38,150. I didn't do this, okay? So don't look at me. All right, anybody got a question? We'll just take a handy dandy black highlighter or white highlighter. What'd you say it was? 38,150?
Yeah.
Okay, it won't let me. Okay, that's fine. Okay, I can use the pen, I just can't use the... I'm trying to mark it out for y'all. The Russians have taken away my highlighter, so I can't use my highlighter. And if you hadn't figured it out yet, I'm in a lazy mood today. You ever have one of those mornings you just wake up and you don't want to get out of bed? Yeah, Hubert, I have those often. No, I don't have those, Hubert. Well, I do, every once in a while. Yeah, me too. Appreciate your interaction. Taxable income, that's when we take off the exemptions and deductions. So 38,150 minus the exemptions and deductions. And this is what we call the taxable what? The taxable what?
Income.
Thank you. The taxable income, that's what you're going to run through the tax code. If there's not any tax credits, like if you have one of those electric cars, or if you have solar panels, or if you have a windmill outside your house, okay, that generates power. What happens when the wind stops?
Well, your power stops too. Right?
Yeah, gotta hate that, haven't you? Gotta hate that. Well, they do use batteries, which stores the energy, but I don't know how long the batteries last.
Well, wouldn't they still have to have like through a power company? Because like one of my instructors uses solar power, so like on days that it's not sunny, he still has to have Duke Energy to like a backup.
See, renewable energy is good, and y'all ever seen those signs on the side of the road like near a fire department that has a solar panel on it? You know, there are some good applications for solar panels. I have solar panels on my electric fences. Those are good because I never have to charge the batteries because the solar panel charges the batteries. That's good. It has good applications. Will it ever take place of fossil fuels? No. Maybe in the year 2250 or maybe 2300, okay? We're not there yet. Okay, we're not there. There's no way it's going to take over nuclear energy. There's no way it's going to take over coal energy or natural gas or OIL. There's no way it's going to take any of those right now. And it's nice to dream like that, and that's good, but you got to face facts. Just like you just said, you got a friend that has to be on Duke Energy along with the solar panels. Why? Because the solar panels, they don't store enough energy yet. Okay? Even with a battery system. We're not there yet. It's so hard for some people to understand that. Okay? Let me give you an example. People in the 1800s and 1700s would have liked to have a car to drive, wouldn't they?
Yeah.
Did they? No. Why? Because the government was trying to do this and do that. No. It wasn't time. Okay? And then eventually in 1901 or 1890s or whatever, they started coming up with the automobile, and then it evolved into what we have now. I don't know why it's so hard for people to understand that some things we have to go slow, not throw out the baby with the bathwater. Don't get me started, but thank you, Miss Riddle, for that interaction. Always nice to have interaction. Makes class go a whole lot faster. All right, I want to show you. Okay, this is important. Write these down. Most of y'all will just have to worry about single, okay? Unless you're married, and then there's two married. There's married filing separately and married filing jointly. Now, you don't have to write verbatim, but you just need to write, okay? Usually married filing jointly, that's usually when both spouses have a what? Job. I'm sorry, married filing separately. That's usually when the two people have jobs, and the jobs are very, very either high paying or they're very equal. Capiche?
Yes.
Mr. B, what's going on? Is everything okay up there? Mr. B? Hello? What's going on up there?
Maybe, okay, maybe he has no connection.
I'm just bringing him back in. He's not going to mute me. You don't mute the teacher. Let him come back up. Mr. B,
Yeah,
what's the problem up there?
Do what?
What's the problem? Hello? Mr. B?
Lost.
Mr. B, are you there?
Yeah, I'm here. I'm just trying to figure something out real quick.
Okay, well, you don't mute the teacher.
Do what?
Okay? You don't mute,
I didn't
you don't
mute the
exclude
teacher.
yourself from the class.
No,
okay?
I hit the mute thing on this. I didn't mute you.
Okay.
You
All
just
right.
can't hear
Just
me.
want to make sure. Turn the camera back on. I just
Yeah.
want to make sure. Okay.
Yeah,
All
it's
right.
not I'm sorry about that.
That's
yeah,
all
I'm
right.
Here. Hold on.
Okay. Just go ahead. If you need to mute yourself, if you're talking on the phone, that's fine. I thought you muted me. But anyway.
No, I didn't mute you.
Okay. Then go ahead and do whatever you need to do to get your computer fixed. All right. So married and you are, this is married filing jointly is when one of the spouses' income or no income is incorporated into it. Like, let's say Miss Anya Sador makes $75,000 a year and her husband only makes $25,000 a year. Then you might want to do jointly, but that's up to the accountant because it depends on how many savings accounts you have. It depends on if you are a certain age. One person may be a senior, one person may not. The one person may be enabled, one person may be enabled. There's all kinds of different things that factor into that. Usually the married filing separately and the married filing jointly, usually that's up to the tax return person or the tax accountant or whatever. They usually say, well, you might want to do this or you might want to do that. So, and the head of the household is unmarried and paying more than half the cost of supporting a dependent child. Okay? Which I think I need to look into because I may be doing that. But anyway, I need to look into that. Okay, so that's the different filing statuses. Most people that are single do the single. Okay? That's pretty much standard. Capiche?
Yes.
Steve,
Okay? Make sure you know those. You don't need to memorize them. You just need to be aware of them. Okay? Because they're going to say in the question, they're going to say, you are filing single or you are filing head of the household. And you just have to look at a different column. We already talked about this. These are the things that exemptions, how many people are living in your house usually, okay? And deductions, exemptions are usually like children, grandchildren, people you're taking care of, whether, that kind of thing, like dependents, okay? Deductions from one person to another, that's self-explanatory. A standard deduction depends on your filing status. Again, if you're a business or a small business, or if you're married, filing joint or filing separately, that affects it. And this is where your the itemized deduction, that's where your receipts come in. And again, I'm not going to spend a lot of time on this. This kind of stuff right here, you need to get your books and you need to highlight these things, okay? They're already highlighted because they're in different colors, okay? Because they're in the little boxes, little colored boxes. You need to make sure you make a note of them. You need to be aware of them, I'm not going to ask you what is the definition of exemptions on the test. I'm not going to ask you that. You just need to be aware of them. You need to know what they are. And here is, suppose you have the following deductible expenditures: $4,500 for interest on a home, mortgage, $900 for contributions. Your filing status entitles you to standardized deduction should you itemize. Well, the first thing you need to do is add up all these. What's 4,500 plus 900? 5,400. What's 54 plus 250? 5,650. What's the standardized deduction? 6,350. So which one should you take? 6,350. Now, a lot of people are saying, well, how do we know which one? I don't know what you're talking about. When you're taking a deduction, your goal is to get the taxable income high as possible or low as possible. Okay, that's a question I want y'all to answer. Is your goal to pay a lot of taxes or to pay a little bit of taxes?
A little bit.
Thank you, Miss Anya Sador, for your interaction. Okay? Then what will make your taxable income smaller? A large deduction or a small deduction?
Small.
A large deduction. It takes away from your taxable income. The 6,350 will take away from your taxable income, so you're paying less. You always go with the largest deduction. I'll write that down. Always go with the largest deduction. 6,350 will be the answer. What? That's wrong. It should be 6,350. You always take the biggest deduction. That's wrong. Somebody wrote these things wrong. You don't ever go with the smaller deduction. You go with the larger deduction because that takes more money off your taxable income. Ignore that. Put 6,350. That's supposed to be 6,350, not 5,650. That's wrong. You'll see in a minute. You'll see why you take off the larger deduction. Just trust me. Okay, we're not going to, you can read about this. I'm not going to get into this too much. A progressive income tax means that people with higher taxable income pay at a higher tax rate. We're fixing to go into the codes. You're going to see this with the codes. Our code system in the United States is a progressive income tax. There we go. Now, I don't know if this is the updated. I don't think it is. In fact, you don't have to write this down. Let me go. I'm going to get you to take a picture of it and make a note of it. I'm going to go 2019 tax code. Images. There it is. Okay, this is the new one. So let's save this. Save images as tax code, download tax code. Now go back to, I'm sorry I don't have a poster with this on it. PowerPoint. Well, all right, take a look at this one. All right, it shows you up to 40%. Y'all see that? How many are there? How many levels are there? 1, 2, 3, 4, 5, 6, 7. Write that down. 7. Okay, now I'm going to pull in the other tax code. Well, I'll tell you what I'll do. Hold on just a second. Let me do this. Since I don't have a poster, I'll do this instead. I'm sorry y'all don't have a technological savvy. I'm an innovative teacher. I'm sorry. 2017. There we go. I'd be a whole lot better off if I had posters in class, I know. Insert. All right, there's the 2000s. Why didn't it save the... Oh, I know why. There we go. There's the 2017 tax code. And I want you to make a few notes about this. I mean, just make some notes. There's that one. And then the other one, I'll bring it in. Give me a second. Pictures. Is that too? I'm about ready to lose it. I should have made a poster. That's what I should have done. Let me bring it in again. I'm sorry. Just give me a second. Pictures. There we go. No, that's not right. I'm about ready to lose it. There we go. Good gracious. All right, make a note of the differences. All right, what's one of the biggest differences? Well, we went from 1, 2, 3, 4, 5, 6, 7 down to what? 1, 2, 3, 4, 5, 6, 7. Still have 7, but what's the difference?
Well, the percentages on one are different than the
Exactly,
other.
they're dropping. They're dropping a little bit. Now, what did I tell y'all to always remember? Nothing is what?
Free.
Okay? I knew when this happened, we were going to get about $100 to $200 extra on your paycheck. Okay? Nothing is free. So that means at the end of the year, are you going to get more or less as a tax refund? You're going to get less. So I upped my withholdings, $100 paycheck at my work here at Tri-County. I upped, when that tax thing went through, I upped mine $100 paycheck to withhold. And my income tax return was not as bad as some other people's, because when your paycheck is adjusted, remember this, when your paycheck is adjusted for tax purposes, that means your what? Your income tax return is going to be adjusted. If you get more per check, you're going to get less as an income tax return. If you get less per check, then you're going to get more of an income tax return. Are you with me?
Yes.
Nothing is free. You're not going to get something for nothing. So, if you want to still get a big income tax return, you have to put some more money back toward that to adjust for the $100 to $200 that you got in your paycheck. The problem with a lot of people, and I'm just saying this because a lot of people, well, darn, I didn't get my income tax. Dang that Trump. No, it's not dang that Trump. It's you didn't have enough sense to know that nothing is free. We live in a society where people think that we should get things for free, and there is no free. You got to make good what?
Decisions.
You got to make good decisions, and you need to plan, just like I did. I knew that my income tax return was going to be affected because I'm getting more money per paycheck. So I'm getting something from the government. So therefore, something's going to have to be given up. So I went ahead and made that decision. When that tax return went in, that next month, I told personnel to take $100 more. That way, I didn't suffer as big a hit. I did suffer a hit, but it wasn't as big as everybody else because I made adjustments. So you see the difference. Look here. I'm going to show you another difference.
I wonder why it should be so. When you work more, you get more money at the end. You don't get.
Say again?
But you worked for it. When you work more, expecting to get a higher tax, you still get small.
Yeah. In other words, in the United States, if you make more money, you have to pay more for government services. That's why these go up to 40%. So, Miss Anya Sador, if you make $1 million, you're going to have to pay 37% on each dollar, 37 cents on each dollar to the federal government. And there's some politicians that want you to pay 70%. A lot of people don't even realize that. Look at the deductions. How much were the deductions for single in 2017? $10,150. Everybody see that?
Yes.
What are they now? I'm pointing at it for those who...
12,200.
Did it go up or down?
Went up.
It went up. Is that going to affect your income tax return? Yes. For married. Oops. For married, how much is it?
24,000.
16,000.
What is it?
12,000 plus 4,000. The standard deduction and the exemption. Okay, see it right there?
Yes.
16,000. What is it now?
24,400.
24,000. It went up. So does that mean that you're going to get extra money? Not if you don't make a dip. Not if you don't go to your accountant and say, look, this tax code change, what is this going to do? Okay, well, this means this, this, and this. Well, how do I fix that? Well, you need to do this, this, and this. Okay, do it. Go to personnel, you do it. That's what personnel and human resources is for, or bookkeeping. If you have an employer, Miss Riddle, where do you work?
I own my own salon.
Oh, yeah, that's right. You do your own thing. So you have an accountant, don't you?
No.
Okay, you do your own taxes?
My mom does them.
Okay. Well, I bet she tells you what to do as far as taxes when the tax code changed, doesn't she?
Well, this is my first year. I haven't even
It's your first year?
for a year. Yeah.
Okay, let's see. Who else up there works? Somebody tell me where y'all work up there at Easley.
I work at a nursing home.
Okay. Do they have personnel and bookkeeping?
Yes.
And
Payroll.
you go there to make changes to your paycheck, don't you?
Yes, payroll.
That's called wise decisions. Okay? If you just sit back and say, oh, well, the federal government's going to give me $200 each paycheck, hot dog. And if you sit there and think that it's not going to come from somewhere, you're not being very sensible. And that's why you got to make good decisions. And there you see the tax code has changed. What is it doing? It's making the old tax code less what? Less complicated, less tedious. I would love for them to get down to a flat tax. Everybody pay 15%. Pay 15% on everything you got. That would take care of that would do away with the IRS. Oh gosh, then people would have to go to work for a living. Yeah, exactly. All right, let me get out of this. Let me get back to where we're going. This is kind of a discussion day today. We're not doing much math. We go over this. We're going to go over income tax Monday when y'all come back. Okay. Tax credits. That is things that the government wants you to do. Put anything renewable power. That's usually what they want you to do. Now, there are some farm subsidies that you can include on this. Okay? If I don't use water from a creek, that's a tax credit. But I have to pump the water from a well for my cows. That's one of those, I don't do it because I don't worry about the creeks, because how many animals go into a creek? How many animals use creeks besides my cows? Okay, nobody's going to say anything. Okay. No animals use the creeks, right? They don't drink water out of the creek. They don't bathe in the creek.
Well, wouldn't birds?
Nobody. Birds do.
Deer.
I know raccoons do. Deer, they drink, they stand in the creek. So what's the difference between my cows and all the animals up creek? What's the difference? I guess because my cows fart, I guess. Maybe that's it. And horses fart too. So I guess that's why. What am I trying to say? Some of these things that the government comes down with are what? Really silly. But that's just me. I got an opinion like everybody else. A tax deduction, that's what comes out of your taxable income. This comes out of your your gross income. This is what comes out of your taxable income. There is a difference. You're going to see the difference when we actually do an example. All this is going to come together when we do an example, okay? And I'm probably going to stop there because I don't want to go into this right now, okay? So we're going to stop there, and I'm going to cut it off.